Tommy, how bad are things and how bad can they get before they improve?
I think, well, first of all, thank you for having me here. I think, well, before the third wave of COVID-19 outbreak, which happened, since early July, things start to get better in Hong Kong in terms of especially the retail and restaurant side of things. But now that with the third outbreak, the retail sector and restaurants as well, they're going to suffer for another prolonged period. I would think that maybe there could be a slight more stronger recovery in the fourth quarter for retail and restaurants. But having said that, I mean, inbound tourism as of now, it's still pretty much had come to a halt. And I think pretty much the only sector that is really doing well right now is the financial sector. And this is going to continue to do well for the rest of the year. For instance, we're going to have some large IPOs coming in Hong Kong, such as Ant Financial, which is definitely a eye-catching one. But overall, with the COVID-19 outbreak, and also even before the COVID-19, the economic momentum in Hong Kong was very slow coming into 2020 because of the civil unrest last year. So this year, I'm expecting only the economy to contract by 6%, actually.
Tommy, so, I mean, where does it... We've had a series of black swan events. You mentioned the protests, the civil unrest. Then, of course, we've got the coronavirus pandemic. And then on top of that, we've got the national security law as well, which has all created a lot of uncertainty. Does Hong Kong's economy actually have to shift structurally in the future, in your view?
I think, yeah, it looks like there will be some restructuring. But I think what happens is Hong Kong will become more of a financial center that serves, the Chinese market, which is actually what it has been doing. It's just that maybe previously there are companies that treat Hong Kong more as a financial hub in Asia, but then this role may be shifting in the sense that Hong Kong is more becoming the financial center for the Greater China market, which means that Hong Kong is still going to be the gateway in and out of China, but this role is going to be even more prominent. So I think there will be offsetting effects coming from, all the political uncertainty arising from the national security law and also the international responses. So on the one hand, you will probably have foreign companies thinking that, they have less confidence on Hong Kong, and then they will be downsizing in Hong Kong. But on the other hand, there are other companies that would want to capitalize on new opportunities arising because of the further integration between Hong Kong and China. And also the third thing is I would expect more Chinese companies to keep on investing in Hong Kong. So,
Tommy?
I would think, but then in all, I would still think that because of the entire, the political uncertainty and also the U.S. China tensions, that it's not going to go away. So I would expect the potential growth for the city to be lower.
Tommy, very quickly, and of course underpinning the economy is ever-rising house prices. You can't base an economy on ever-rising house prices. What's your forecast for what happens with the residential side, commercial and retail parts of this?
I think for the housing market, it's actually surprisingly resilient, even up to now, because after the past 12 months that the city has gone through, the civil unrest, COVID-19, and also the national security law. But then, I mean, between now, between, like, say, mid-2019 and now, housing prices have fallen only by 5-6%. Or even less. So, the housing market is quite resilient. A lot of it has to do with, well, first of all, low interest rates, but then more importantly is the expectation that a lot of the domestic local residents have on the city, that housing prices just never seem to be able to drop by a lot. So I think that pent-up demand is still going to support housing market in the short run, at least. But taking a more medium-term perspective, as the economy is going to be growing slower than before, as I've mentioned, because of part of it has to do with the political uncertainty, housing prices cannot be rising as quickly as it had been in the past decade or so. Now, in terms of retail and offices, I think it's similar. Like right now, they are being battered by the poor economy. They're less resilient than the housing market because they are more correlated with the economic performance. But taking a medium-term perspective,
realistically, when can we see the retail sector? When can we see the retail property sector picking up? What will it take?
I think it will. Now, I think they will gradually be picking up next, in next year. But then we'll probably see a more a prominent pickup beyond next year, actually, because I think we have to see a return of inbound tourism, which probably won't happen this year. Maybe it will start picking up again at the end of this year. But then I probably won't expect the level of inbound tourism to return to, say, the 2019 level until 2022-23. So that retail sector or prices of retail segment would depend heavily on that.